need to focus on the market before we get into the weekend. So help us out with that. We have Sacchitanand Uttekar who joins us for a technical check. Hi, Sachi. I'm sure you're as well quite excited about India kicking start, their World Cup campaign. But we'll talk about that later. You tell us, what is the view on the markets? You had a good start, holding around 19,500 levels you're tracking from here.
Good morning, Nigel. Good morning. Really, I think the market has rebounded right now. We are expecting that momentum could continue towards 19,605. But if you look at the initial data, we are which is indicating that the floor is somewhere set at around 19,460, 450 kind of a zone. And on a decline, I think it will be a good opportunity to create some long positions. So when it comes to Nifty, probably we may see again a swing towards 19,550 in the second half of the day, and probably that is the level wherein we are expecting the expiry to shape up. But structurally, I think the low top, low bottom sequence, which was going on for the last 2 weeks, that particular sequence seems to be ended. We saw a dragonfly doji formation in yesterday's session, and the same has been confirmed with the gap up opening. Now, if this particular gap sustains, then probably we may see, Nifty again reviving towards 19,800, in the coming week itself. So yes, we are changing our stance, and the stance from here on remains on buy on declines. And even for the day, I think 19,460 looks like a dependable support wherein some long positions can be committed. From a stop loss point of view, one can maintain a stop loss at 19,430 on the lower side. And on the higher side, we may see a swing towards 19,550 followed by 19,605.
All right, so buying closer to 19,450, 19,460 would be a good strategy. And he expects the Nifty to resume its uptrend once again towards that 19,800 mark. Sachi, individual stocks, how would you play them, and what would you play right now? Because a bunch of them are doing well at the same time, a bunch of them falling as well. So would you be aggressive on the long side or cautious on the short side? How does that work?
Mangalam, I think it's better to create long positions here because we are at the fag end of the rally, and there are opportunities which are still doing really good. So if you look at a structure like Indigo, which was forming a low top, low bottom formation, we have a firm breakout from a falling wedge formation. So it is again a clear-cut trend reversal indication. We have already, recommended this particular stock to our clients, but I still believe that there is a good, healthy upside which is still yet to be capitalized. So from a target perspective, we may see this particular rally getting continued towards 2560 going forward. So even here, we are still recommending building and chasing long positions. The stop loss can be placed at 2440. The second stock which has been on our radar is Havels. Now again here, the structure was very healthy. We have seen the weekly on the weekly charts, it has been sustaining above its 5-week exponential moving average. And from a candlestick perspective, this looks like a rising 3 formation, which is a rare continuation pattern. So even here, we have seen a fresh breakout in today's session. The stock is sustaining well above its 3 days highs. And that's why we see that this particular move can extend towards 1480 eventually. The intermediate target is placed at 1440. The stop loss for the trade from here on can be placed at around 1405.
Okay. All right. Thanks a lot for that, Sachi. Well, that one clearly is moving well, moving to the high point of the day.